Ever wondered how to achieve financial freedom and become the master of your own wealth? We all dream of it, don't we? The key lies in understanding and applying smart investment strategies. Investing isn't just about making money, it's about making your money work for you, ensuring a secure future, and achieving financial independence. It's a game of chess, not checkers. And the best way to learn this game? By delving into the wisdom of a legendary book, The Intelligent Investor. Chapter 1 of The Intelligent Investor lays the groundwork for successful investing. The first key point we encounter is the fundamental distinction between investing and speculation. Investing is a methodical strategy aimed at generating steady wealth over time. It's about making thoughtful decisions based on thorough analysis, reasonable expectations, and patience. On the other hand, speculation is akin to gambling, where decisions are based on whims, rumors, or the hope of a quick profit. The second key point is the importance of a long-term perspective. The book emphasizes that investing is not a sprint, but a marathon. It's about the journey, not the destination. This long-term perspective allows you to weather the ups and downs of the market without panicking. In the short term, market fluctuations can be unpredictable and even alarming, but over a longer period, the general trend has been upward. The book also introduces the concept of Mr. Market, a metaphorical character representing the mood swings of the stock market. Some days Mr. Market is optimistic and prices are high, while other days he's pessimistic and prices drop. As an intelligent investor, you should not be swayed by Mr. Market's moods, but rather make decisions based on the intrinsic value of the investments. Next, we delve into the importance of diversification. By spreading your investments across a variety of sectors and asset types, you can mitigate risk and enhance potential returns. As the saying goes, don't put all your eggs in one basket. Lastly, the book underscores the significance of continuously educating oneself about investing. Knowledge is power, and in the world of investing, it can be the difference between success and failure. In summary, Chapter 1 of The Intelligent Investor sets the tone for the entire book. It encourages us to approach investing as a disciplined, long-term endeavor rather than a get-rich-quick scheme. So remember, investing is not about getting rich quick, but about growing wealth steadily over time. Inflation, our greatest nemesis. How do we combat it as investors? Inflation, the silent but persistent enemy of wealth, quietly chips away at the value of our hard-earned money. It's like a shadowy figure in the night, constantly lurking in the background. Chapter 2 of The Intelligent Investor sheds light on this very issue. It emphasizes the profound impact of inflation on our investments. You see, inflation erodes the purchasing power of money over time. So if we simply stash away our money under the mattress, we're actually losing value. It's a bit like trying to climb up a downwards moving escalator. But wait, there's a silver lining. The book offers us strategies to safeguard against this economic phenomenon. One strategy is investing in assets that tend to increase in value over time, outpacing inflation. Think stocks, real estate, and certain types of bonds. Another strategy is diversification. By spreading our investments across different asset classes, we can reduce the risk of any one investment being severely affected by inflation. It's like not putting all our eggs in one basket. Lastly, the book reminds us of the importance of investing for the long term. Over the long haul, the ups and downs of inflation rates tend to even out, and the overall trend of asset growth remains upward. Remember, a smart investor always plans for inflation. So, let's be smart and plan ahead using the tools and strategies we've just discussed. Safety first, but what does that mean in the world of investing? When we dive into the final chapter of The Intelligent Investor, we're introduced to a critical concept, the margin of safety. It's a principle that serves as the protective barrier against the unpredictable nature of the markets and the uncertainties that come with it. So, what exactly is this margin of safety? Picture this. You're buying a house. Before you hand over your hard-earned money, you'd want to be sure that the house is structurally sound, right? You'd want a safety margin, a buffer against any hidden flaws or unexpected expenses. Investing in stocks is no different. You're buying a piece of a business. The margin of safety is the difference between the intrinsic value, the real fundamental value of the business, and the price you're paying for the stock. Think of it as buying $1 for 50 cents. It's a principle that ensures you're paying less than what the investment is fundamentally worth. It's a cushion against the unexpected, a buffer against error, miscalculation, and unforeseeable future developments. But why is this margin of safety so important? With the market's inherent unpredictability, the margin of safety acts as your protective shield. It gives you room for error in your calculations of intrinsic value. More importantly, it minimizes the potential for capital loss. The concept of a margin of safety isn't just about numbers and calculations. It's a mindset, a philosophy that guides your investment decisions and strategies. It encourages a disciplined approach, a focus on risk as much as on potential return, and above all, a respect for the unknown and the unpredictable. In the end, the margin of safety is all about reducing risk and increasing the potential for profit. It's about making intelligent investment decisions that prioritize the preservation of capital over speculative returns. And so, as we close this chapter, remember this golden rule of investing. A margin of safety is the buffer between your estimate of intrinsic value and the price you pay. It's the principle that keeps the intelligent investor safe in the turbulent seas of the market. So, what have we learned from The Intelligent Investor? We've journeyed through the pages of this influential book, picking up wisdom and strategies along the way. Let's take a moment to revisit the main points we've discussed. First, we delved into the crucial distinction between investing and speculation. Remember, investing is not about making quick profits or betting on the latest trends. It is about thorough analysis, long-term commitment, and patience. It's about making decisions based on facts, not emotions. Speculation, on the other hand, is akin to gambling. It's a risky game that can lead to significant losses. As Benjamin Graham said, the intelligent investor is a realist who sells to optimists and buys from pessimists. Next, we examined the silent thief that is inflation. It's an unavoidable part of our economic landscape, slowly eroding the purchasing power of our money. Inflation can turn a seemingly good investment into a poor one if not considered in our calculations. So, we must always invest with an eye on inflation, ensuring that our returns are not just nominal but real. We also explored the concept of a margin of safety. This is a principle that serves as a buffer against the unpredictable nature of the market. It's about buying an investment for less than its intrinsic value, providing a cushion against potential losses. The wider the margin, the lower the risk. This principle, Graham emphasized, is the secret of sound investment. In essence, the intelligent investor teaches us to approach investing with a disciplined, analytical mindset, to be aware of the impacts of inflation, and to always maintain a margin of safety. These principles are not just for the stock market but apply to all aspects of our financial lives. They are lessons that can guide us in our quest for financial freedom, lessons that can help us build wealth and secure our future. They are lessons that, once learned, can transform us from being mere participants in the market to being truly intelligent investors. As we journey towards financial freedom, may we always remember these principles from The Intelligent Investor. Now that we've armed ourselves with knowledge, what's the next step? One might wonder. We've traversed the landscape of investing, from its foundation to the intricacies of managing inflation and ensuring a safety margin. We've gleaned lessons from the pages of The Intelligent Investor. Yet the journey doesn't end here. Just as a book isn't merely a collection of pages, investing isn't just about buying and selling stocks. It's a discipline, an art form that requires continuous learning, practice, and refinement of strategies. The principles we've learned from The Intelligent Investor are not a set of rigid rules, but a guide to be molded and adapted to our unique circumstances and goals. Consider this book as a compass, guiding us towards making informed decisions and navigating the often turbulent waters of the financial markets. It's about understanding the value of a company, not just its price. It's about guarding ourselves against inflation and ensuring a margin of safety. And it's about patience and consistency, not quick wins or overnight success. But remember, it's not enough to simply read and understand these principles. They must be applied, tested, and adjusted in the real world. Investing is not a spectator sport. We must dive into the arena, make our moves, learn from our mistakes, and celebrate our victories. We must also remember that the world of investing is ever evolving. New trends emerge, markets fluctuate, and economies shift. As intelligent investors, we must stay abreast of these changes, continuously updating our knowledge and tweaking our strategies. Finally, let's not forget that investing is a journey, not a destination. It's a path towards achieving our financial goals, whether that's buying a house, funding our retirement, or simply growing our wealth. So, what's the next step? It's to take action, to apply what we've learned, to embark on the path of intelligent investing. Knowledge is power, but only when applied. Start your journey towards financial freedom today.